German industrial giant Siemens is warning it's going to be harder to hit its full-year profit forecast. Joining us now is its CFO, Joe Kaeser. Well, welcome, Joe.
Thank you.
You issued your forecast back in November, calling for growth from continuing operations. Profit for continuing operations is flat, and sales rising as much as 5%. What changed in your view that now makes it harder for you possibly to achieve that forecast, that target?
Well, first of all, we have not been warning about anything that earnings would be short of what our assumptions have been. What we have been seeing over the last 2-3 months is that there have been a few challenges, especially in the transmission and wind environment, where we need to connect the windmills, the offshore wind, to the grid. There have been a few challenges there. So what I've been saying was that there is less margin for error than we would have hoped for in November.
And where is that stemming from? Is it from the weakness in Europe?
It took quite some time till the European community, the Euro 17, went into a position where they kind of controlled the debt crisis. No one expects Europe to solve the debt crisis. All what has been expected was to get control and take active control over it. And that, in a nutshell, we believe has happened in December. But there has been quite some time till that was actually achieved.
Now, you mentioned transmissions earlier. What sectors in particular are you facing big pricing competition?
There is some pricing challenge, first and foremost, in the renewable energy, because it's a very attractive business. Everyone wants to be part of that business. And so we see in the wind environment that many of our competitors are trying to get the pricing down in order to get their fair share of the market. So what used to be a very handicraft type of emerging business now enters into the second phase of industrialization. So there will be consolidation in that market. And before that consolidation finally happens, there is some pricing challenge here and there. And this is something which we need to overcome by good execution and good innovation on the performance of our wind turbines.
And you've also been hit in the healthcare area as well.
Well, healthcare actually, for the most part, what I see in healthcare is actually a decent outcome of what you can expect. There is no surprise that Europe has been weak in the imaging environment, because obviously, especially the southern European part, did not really buy a lot of imaging equipment as expected. There is no surprise that the US has been stronger on imaging. But all in all, if I look at how our company has been doing, also in the first quarter and last year in imaging, has been satisfactory.
On the other hand, you've been bullish about the prospects for natural gas here in the United States. What gives you that optimism, and what role would Siemens play?
Well, first of all I can say is that the U.S. is blessed to have this type of natural gas resources, because I do believe that could actually be kind of a hidden tool to repower the U.S. industrial environment.
How so?
And because if you have if you have gas prices of $3-4 or something like that, that could actually help. That could actually help the economy to recover, to show some strength. And that's why we have been heavily investing into the U.S. Gas turbine markets. We built a huge factory in North Carolina. We are just about to fully ramp it up now, and then will be fully operational comes 2012.
Now, you see the United States and emerging markets possibly rebounding in the second half of this year. Are you anticipating, for example, in the U.S., another round of stimulus spending?
Well, I mean, obviously, the jury is out on whether or not there will be stimulus spending. The fact is that the U.S. goes into an election year. There's a lot of good effort to bring the unemployment rate down. There have been very encouraging signs on the creation of new jobs and so on and so forth. What we have also seen is that time and again, the U.S. economy, the U.S. people are very, very powerful if it comes to recovery. They want to get something done. They don't leave it up to someone else, to get the job done. And that's what you can see now. They are standing up. They're stepping up. They invest some of their savings again into consumption. And that's actually something you should do. Saving is something you need to do when the economy goes up, and not if your economy goes down, because then you actually just accelerate the downturn.
So this optimistic outlook that you have for the U.S. and the emerging markets, what does it mean for Siemens?
Well, it's good for us because we are basically focused on infrastructure, on healthcare, and on energy, and those are the areas everyone needs in the world. Secondly, we've got almost 70,000 people working for Siemens in the United States on revenues of about 20 plus billion US dollars. We have a very, very robust footprint in China, and we still believe that we know what's going on, in the European part.
Lastly, you've got $12.5 billion euros in cash, roughly 10 billion US dollars. What do you use that cash for? Are you going to buy, invest?
Well, first of all, it's a luxury problem to have, because in times where there's uncertainty about the banking environment, especially in Europe and elsewhere in the world, it's always good to control your own destiny. So there is no need to waste money. Just keep the money together, make sure that we are strategically and operationally flexible at any given point in time.
Give back to shareholders?
Well, let's do the job first in 2012, and once we have killed the bear, then we talk about how to distribute the fur.
Okay, thanks a lot. Appreciate you joining us. Our thanks to Joe Kaeser, CFO at Siemens. I'm Fred Katayama, and this is Reuters.